We have Simon Lee. He's the managing director at Sapience Capital Partners. Simon, thank you very much for joining us.
Thank you for having me.
Simon, where do you see most data center capital going today, geographically speaking?
Well, the predominant capital still goes to the U.S., followed by Western Europe, and I don't really expect that to change much in the near term, particularly as the size of facilities in those two regions are getting larger and larger. Most of the demand in the world for data centers is still happening there. But I do see the emerging markets starting to pick up as well, and so there's a growth story basically in the rest of the world, and they're going to need quite a bit of data center, just like the U.S. and Western Europe have. They have a lot of catching up to do, which means that ultimately capital will go there. But today it's still the U.S. followed by Europe.
Of the gamut of data center services, from power-based to infrastructure as a service, where do you see most capital going at the moment?
Most of the capital probably still goes into retail. And the number of people that can participate on the wholesale level are fewer, they're larger, and they obviously borrow and more money at any given point in time. But on the retail side, you have equity investors. Some of those are also lend or borrow money, and so they also take out debt. So I would say the retail component. Now, there's another factor that goes in there, which is the insourcing. People that basically fund their own data center builds, use a combination of debt and equity if they use their balance sheets. And so that market as a whole is much larger than the outsourcing market. So in general, it's retail, probably followed by wholesale, and then finally infrastructure as a service, which is a nascent and emerging area.
How attractive are providers of infrastructure as a service to investors today, and what makes them attractive, and what are the pros and cons of lending capital to companies like that?
They're attractive. They're attractive because it's new and it's hot. And people are interested in this because it's a model that's been discussed for so long, and we've given it a great buzz name, the cloud, that there's an immense amount of frenzy around it. And so what makes it attractive as an investment area, and what makes it interesting for clients, is that it's something that solves their problem. They can pay for things by cycle. It's easy, and it cuts down on the CapEx and it shifts it to OpEx at a very granular level. And so the story is quite compelling, and investors are interested in it because the technology that enables this is now available. It can be delivered at a service quality that we think is sufficient for enterprise use. The challenges with it, however, are that the adoption model is still a bit unknown, and getting a large company to outsource everything on an infrastructure basis is still a challenge. They're used to owning it. They're used to buying things by the box, not necessarily by the instance or by the megabyte. And so there is some attitudinal and cultural challenges that need to be solved, basically. And so these are some of the issues and some of the risks. We're not sure how it's going to play out, but in general, we do believe that infrastructure as a service, will happen.
How are lenders and private equity firms viewing the cloud computing space in general? Which segments of that market are considered hot at the moment? And you mentioned infrastructure as a service has been hot. What other areas are very attractive today?
Well, I think my view of it is that we're just calling old ideas new things. So there was a time when we used to have ASPs, and they were hot, application service providers. And now we've relabeled it cloud, and it's a flavor of cloud. So every part of the cloud topic, frankly, is hot. From the infrastructure, which we're seeing more of, and we're seeing more take-up of, all the way to application delivered as a service. And so every segment really is exciting. The challenge is that it's trying to figure out where people are going to adopt in what time frame. That's really the problem. There's still this issue today where people are still trying to coalesce around a single definition of cloud, because if you ask 10 people what it is, then you might get at least 3 or 4 answers, if not more. So there is that challenge, but I would say that everything is interesting. It's mostly interesting to equity players, not so much debt players, because the model is not sufficiently developed now to really lend against. So I think that from a venture standpoint, there's a lot of interest in cloud. The companies aren't large enough really for the private equity people, and the debt guys are interested only when there's certain cash flow. And so it's still a bit of ways away for them.
What kinds of vendors that sell into the data center space are attractive to investors today? Do you see more power and cooling vendors get funding, or server network storage companies?
Frankly, not a lot of either. But if I were to pick one that were more interesting, server and network and storage is more interesting. But the predominant wave of development for those technologies happened 10 years ago. So in the late 90s, the early part of 2000, there was an immense amount of capital put into everything from a systems perspective. So all your components, your new silicon developments, your new hardware and boxes, et cetera, for both networking and for enterprise computing really happened then. So all these blade technologies that we see now coming from an HP or an IBM, Dell, et cetera, in part were a product of some of those innovations. You had an EMC get built, back then, et cetera. Today, a lot of that capital, frankly, has shifted to other things, like social media, as an example. It's difficult to build a box company, especially when the larger companies in the space do quite a good job of it, and it's very hard to get traction. So for the amount of investment that has to go in order to get adoption and a requisite return for it, I think it's pretty challenging. I really don't look at data center components, say cooling, as a space. I don't think it's large enough, frankly, to justify venture capital, so to speak. But there's definitely a need for certain, new types of technologies. If someone could solve the battery problem, I think that would be interesting.
Simon, thank you very much.